Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro dollar, a fifth bullish white soldier yesterday and quite a long one as well, after the previous session's hanging man pattern. Now, as I said yesterday, a hanging man pattern is a well-known pattern and traditionally it's seen as a bearish reversing. However, the data indicates that about 6 out of 10 times it ends up being a bullish continuation pattern. So it's going to be interesting to see if the market would follow the tradition or the data. In the end, we can see it followed the data. It was also a third consecutive close over the April 2020 low at 107.25 and the first close over the May 2020 low at 107.66 and the slowly rising short medium moving average currently at 107.73. Prices, in fact, punched up through both the medium and the long moving averages, currently at 107.92 and 107.96 respectively, plus the bright red highlighted upper time currently at 108.04, the early March to early June bearish Andrews pitchfork, though the market did not manage to close over these. With this move higher, I've downgraded the importance of the mid-April to late June ascending expanding wedge pattern. The pattern achieved its downside primary target, and I will now retire the much harder to reach secondary target down at 106. So far today, a slightly lower open and a test up just through the medium and long moving averages overhead and at the bright red upper time at this moment. Cable, aka sterling against the US dollar. Today's the day. Voting begins and we'll know the result of the next government of the United Kingdom within the next 24 hours. In the meantime, yesterday saw a bullish opening white Mariposa after the previous session's bullish closing white Mariposa. Despite the length of these two, we at the moment will not be long enough for either a weekly reversal or an outside week. The market utilized the congestion at 126.72 for a move up over the combination of the 50% Fibonacci line of the June 2016 to September 22 move and the September 2020 low, both at 126.99. And also importantly, the bright red highlighted breached July 2021 to date downtrend currently at 127.25, closing over both. Now prices reached as high as the lesser Fibonacci line at 127.72 before pulling back down to close over the bright red downtrend. The market is now sitting over a wider congestion zone, which is between roughly 125.69 to 126.74, possibly as high as 126.99, and consisting of the slowly rising long moving average, currently 125.78, the 50% Fibonacci line of the July to October 2023 move at 125.90, the green highlighted and slowly rising short medium moving average, currently 126.49, the mauve highlighted flatlining medium moving average, currently 126.45, congestion at 126.72, and the 50% Fibonacci line of the June 2016 to September 22 move plus the September 2020 low. I might soon include the bright red breach July 2021 to date downtrend into that series. Overall, late 3 weeks ago, prices broke down and out from the April to early June bull channel, which morphed into an ascending wedge pattern. With the current moves higher, I've chosen to downgrade this pattern also to retire both the primary target in the 125.65 zone, as well as the secondary hard to reach target in the 121.80 zone. Now, so far today, a move higher, small move higher, but given past, still within yesterday's range, but given past evidence, there may be little movement until the exit polls are announced at 2200 London time. Euro sterling. A second bearish black crow yesterday after the previous session's reactionary bearish engulfing pattern. The market is still within the June-based dark blue highlighted rising wedge pattern, currently 84.59 to 84.99, with prices closing under the April 2021 low 84.70. With further congestion higher up from the late May to early June congestion that had previously made a bearish halfway hesitation between roughly 85 even to 85 and a quarter. Overall, the last 2 to 3 weeks have been a reactionary move back up from the market reaching its potential down at 84.30 from the May to June based bearish halfway hesitation. So far today, we're capped by the April 2021 low and supported by the dark blue lower trend line, and looking like an indecisive doji cross or an indecisive spinning top right now. US dollar against the Japanese yen. A key reversal up and bullish engulfing pattern yesterday, if only just on the latter. To be honest, the bullish engulfing pattern was not that hard to do, as the previous session was an indecisive doji cross. It was nevertheless yet another new high not seen since December 1986. The top side was capped again by the dark blue highlighted middle time, currently at 162.20, of the recent March to May bullish shift pitchfork. Above that is the purple highlighted middle time, currently at 162.59, of the older February 2022 to January 2023 bullish shift pitchfork, and the December 1986 high at 163.36. For information, the middle time had kept the market in late April. Just for guidance, we have a lot of gaps up here from back between the April 1990 to the December 1986 high, and that's up at 163.36. Now, so far today, a reactionary move lower, but still within yesterday's range, and looking like a small bearish opening black Mariposa right now. US dollar against the CNH, the offshore Chinese yuan. A reactionary and very interesting combined key reversal down and bearish engulfing pattern, if only just on the latter. What has proved interesting was how we made a new high, one not seen since November last year. Gotten capped at the significant and widely advertised, by me at least anyway, widely advertised congestion in the 731.06 area, with further congestion between 732 and 734, and then seen prices switch lower with what turned out to be a strong bearish pattern. Nevertheless, for now, the market is still within the June-based dark blue highlighted bull channel, currently 729.49 to 733 even. Down below we have the previously mentioned congestion zone between 724 to 727, within which sits the rising short medium moving average, currently 725.87, the rising medium moving average, currently 724.45, and the upper trend line extension of the January to April ascending triangle, currently at 724.19. Now, so far today, a test lower, and we're testing and pressuring that dark blue lower bull channel line right now. US dollar against the Mexican peso. A second bearish black crow and follow-on low to the previous session's significant key reversal down. Prices also breached and closed below the dark blue highlighted middle time, currently at 1831.03 of the early April to mid-May bullish Andrews pitchfork. Above, we have the capping action, at least on the closing basis, of the February 2020 low at 1851.71, which aided in the capping action seen in early June. I'm now considering for a second time if the whole action in June from the peak at the start of the month at 1898.60, whether it might be a bearish halfway hesitation in construction. We'll have to wait and see on this one. However, in the meantime, I would like to put once more the following idea in front of you of the longer term possibility of the action from 2022 to date as potentially a huge double bottom pattern idea. We are now, after the rise during May, June, and even now in July, despite the recent falls, relatively close to the neckline area for this in the big scheme of things of around the February 2020 low at 1851.71. As this is something I saw on my monthly charts, I would appreciate at the very least monthly closes, consecutive monthly closes over this level to confirm such a long-term potential move higher. Now, prices came close to doing this in June, but failed to make that significant high close. Thus, it'll be interesting to see what the month of July may bring. So far today, higher open, but the market was capped by the dark blue middle time and has moved down towards yesterday's low. Below, well, We have the lesser Fibonacci line at 1794.37, with the nearby April high at 1699.90. But below that is the bright red highlighted neckline currently at 1780.67 of the January to May head and shoulders top, and that looks more of an interesting level, though on the way up it wasn't actually held there either, but last week's move down did.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.